valuation metrics. Here we have the stock is currently trading within 14,020 cents, 20 Tanzanian shilling per share. But as we calculated, its intrinsic value, it's around 16,130 and 70 cents, which is undervalued relatively. We use a multi-stage dividend discounting model to calculate this value. And also, the bank is expected to have a good, strong, to have a good profitability in the future, and also digital growth and sustainable development, and that support a buy recommendation for this bank shares. And also, the bank maintain strong distribution in the country, with having more than 243 branches, and also having more than 700 ATM machines, and also having more than 73,000 of wakalas in the country. And also, the bank has make a transaction more than 94% through using digital banking, and this indicates that strong digital adoption and operational scalability of the bank. The bank mainly works in 4 divisions that are retail banking, wholesale banking, and agribusiness and treasury. And the bank cost to income ratio is around 38%, that demonstrates superior cost discipline compared to its peers. And also, the bank has a good non-performance loan ratio that's below the ceiling ratio. It's around 2.5 and or around 2.7%, that indicating the bank has good credit risk management. And let me mention the qualitative characteristics of the management of NME Bank. The NME Bank management is experienced in leadership with clear strategic direction, and also it gives more emphasis for digital innovation and financial inclusion, and has good transparency and accountability. Here we have financial analysis and valuation. We use in financial analysis the prior 40 financial ratios, and also having a forecast of the coming 5 years through using multi-stage dividend discounting model. Here we have earning per share. As you see in that figure, the earning per share is growing from year to year continuously. That shows that the bank is developing and getting high amount of earning per share that supports a buy recommendation. And here we have return on equity. As mentioned here in this graph, the forecasted earning return on equity is show that an increasing trajectory with an estimated 15% growth rate, and this shows that the bank is performing well in the coming near 5 years. And the other one is return on asset. The bank's profitability is increasing from year to year, as mentioned in this graph, that the bank's ability to generate profit from its assets increasing, as we mentioned here. So it supports a buy recommendation. And we have compared the company industry average. As I mentioned earlier, the cost to income ratio is of any bank is 38. That is preferable than the others in this industry. And this shows that driven from digital adoption. And the last point I mentioned is the non-performance loan ratio, so that it's below the ceiling of the national. And this indicates that high quality of collateralized loan book. And the last point I touched is that dividend policy. The dividend is increasing from time to time as forecasted, and as I mentioned the prior years. This shows that the dividend is increasing from year to year, but also the company is holding high amount of net income, around 70% of the net incomes, to invest and to sustainable growth in the near future. So this supports a buy recommendation.
Thanks. I am Johannes. I will continue from the valuation topic. We selected multi-stage dividend discount model for calculating the intrinsic values of the NME Bank. We chose this model because the company is recently paying dividends that have different growth rates. So we expect the company to continue this rate up to 2029, and we expect the company to make sure the dividend growth rate is 6%. We take this from the GDP of the company. To calculate the intrinsic value, we have to calculate the cost of equity of the company. To calculate the cost of equity, we use the risk-free rate of 11.75 treasury shares of 10 years treasury shares, beta of 0.1. It is a 5 years beta, and the market risk premium of 11.25. Then after that, we calculated the dividend, or forecasted the dividend for years up to 2025 up to 2029, and we discounted them to the last date of December 31, 2024. In the date of December 31, 2029, we calculated the terminal value, because after 2029, the company will grow about around 6%. So when we end up the values, we arrive at the last figure of 60,130 and 70 cents of Tanzanian shilling. As we compare this from the 40,020 of the current price of NME Bank as of December 2026, the company is undervalued and it have a capacity to, or it have a upside potential of 50%. So we recommend you, the new investors, to buy and the existing investors to hold their shares.
The next part of our presentation is about investment risk. My name is Delayt Marcos, and I will be presenting the outline about the investment risks that affect the bank and how the bank manages those risks. Despite our confidence in recommending this investment, there are some risks to consider. The first and the most important risk that affects the bank is credit risk. Credit risk means that the borrower may default in repaying the loan, and this affects the bank, and the bank manages credit risk by holding collaterals and also by monitoring the loans frequently. The second risk is the second most important risk is about market risk. Market risk arise due to the change in interest rate and exchange rate, and the bank may reduce this market risk by making sensitivity analysis in the interest rate. The other risk is liquidity risk. Liquidity risk, as we all know, means that inability to meet a short-term obligation like deposit, and the bank manages these risks by maintaining highly liquid reserve. The other risk is competitive risk. In a world full of competition, especially in financial market, NMB Bank manage this competitive risk by making its customer loyal to him, and it makes its customer loyal to him by meeting their expectation or exceeding their expectation.
Okay, thank you. My name is Samrait Makboum. I'm going to present about the environmental and social impact of the NMB banks. So when we start from environmental, NMB issued a Jami sustainability bond rising 400 billion Tanzanian shilling for the water management and for green infrastructures. And when we see NMB Bank planned to reduce its carbon emission by 30% in 2013, and in 2024, the company planted over 1 million trees.
I can start. Oh,
Okay, thank you. So now first, let's see the environmental impacts. So, first, NMB issued a Jami sustainability bond for renewable energies and for the green infrastructures. And when we see NMB also planned to reduce its carbon emission by 30% in 2013, and also the company in 2024 planned 1 million trees all over the nation. So these show that the company is committed toward the environment in order to reduce its environmental effects. So the next one is a social initiative. So NMB committed 1% of its annual net profit, after tax net profit for the community, and for 5 years, the company gives 24 billions for the community, I think.
Thank you very much. Maybe I can start with two. The first question is, so I know because of time you have to rush through the presentation, but I think because your recommendation is buy and there is a huge gap between the current price and what you are suggesting, it's just for us to understand what is driving this intrinsic value. I know you mentioned GDP growth and other things. That's very much common to the Tanzanian banks or other companies in the industry. So the first thing is it unique to the company? If it is, what is it? The second one is in terms of valuation, cost of equity seems low when you're considering Tanzania and where it is, and then the risk. Did you consider other risks to include it to the cost of equity? I haven't seen premium company-specific risk premium, if there is any, on top of the market risk premium, which is pushing down your.
Yes, I'd like to ask, what is the single event that could impact your position? Single events in the market or in the business could make you change your mind about the position.
For me, you've mentioned that the payout is 28% and 70% is actually reinvested. And why do you find that suitable for an investor? I want my money back if it's doing well. I want to get a payout. So why do you think 28% is good for a buy?
For me, is the real competitive advantage that the bank has as the
question, just one question. Why did you specifically use the dividend approach to discount? Why not other approaches? Do you have any specific reason?
Again, technical question develops from those judges. Did you use dividends or did you use free cash flows? I haven't seen any free cash flows in there. If you used free cash flows, probably you didn't present it properly for us. Did you use free cash flows to the firm or free cash flows to equity? And where did you get that beta number of 0.1? Country risk, and why your cost of equity is so low?
Thank you. To answer this question, we choose the dividend discount model because the company is currently using the dividend grows currently from the year to year. So we expect the company is using different growth rates. So the dividend discount will show us what will the company invest in this question about it. We don't use the cash flow in our financial analysis because the financial analysis, when we see the data of the company financial analysis, we are not able to meet the company cash in cash flow statement are not meeting. So we are not to based on the cash flows. That means, and when we choose about 20% of dividend as of the thing, the company is growing. So if the remaining 70% of the company retained earnings is in the bank, so the company will go for time, the company will pay the holder without dividend. It is from the stockanalysis.com. We use it this is because is about equity. So like it is have to be 5 years stock and
Answered. Okay. As we mentioned earlier, the payout ratio of dividend payout ratio is around 28%, which means around 28%, and the company is holding high amount of net income in its retained earning. That's why the companies we mentioned that's developing, so it's expected to reinvest that net income or return earning to expand its industry and to get the higher return for its equity holders. So as it's the company is still on developing way, it's expected to take higher risk in order to gain a higher return, and also for its shareholders.
The other question was about country risk. We consider a country risk, but as we know, the country risk means it arises from political or war, and I found that risk it can be reduced. And the main risks that affect the country is mainly it is credit risk, and that's why I present credit risk.
At least the remaining question is about what is the main point to change your decision from buy to the sell position. The main point is to be making is the current price of the company. If we see from October 2026 up to February, it is increased about by 66%. So this is not critically, but so this will lead us to change our position. Thank you.
In that case, I'm going to go back again to the 28% payout. Is there another bank that you compared that actually pays more? Because in that case, I might be considering another bank because I do want to get a payout and I want to get a better payout. So have you guys evaluated other companies on what percentage they pay out?
Okay. Point is, you are the company. You are an equity investor, so you expect the company to grow. So it is not about you are not an investor to go and back to. So our point is the company is growing. It is the growth is fast. So your 70% of return being held will make you richer and higher to the company, and it will be giving you some of dividend, maybe in the form of share dividend that your share is increasing. Thank you.
Thank you, Team A. I think good job. So I think you can either stay in the room or wait outside, but don't mix with the other teams. Good. I think we can call the next team.
Good morning, dear distinguished guests and financial professionals. I'm Skadar Belacho from Team B. Today we are presenting the equity valuation for NMB Bank, which is listed on the Dar es Salaam Stock Exchange by the price of 9,016 Tanzanian shillings as of January 14, 2026. But by our analysis based on dividend discount model, we get the intrinsic value 13,000 Tanzanian shillings. This show fundamental analysis, which the first one is the global analysis, the second is the country level analysis, and industry level analysis, and the company overview. On the global level, the global GDP is projected to slow down to 3.2% in 2025, and also the inflation is projected to slow down to the 4.2% in 2025. And we did our country level analysis. It is macro level analysis by using the PESTEL frameworks, and the general conclusion from this analysis is the country level or the country situation is supportive for the growth of financial sector. And we did our industry level analysis by using the Porter 5 force models, which are barrier to entry, customer power, supply power, threat of substitutes, and competitive rivalry. And the general conclusion from this, our analysis is Tanzanian banking industry show strong growth appetites, and the key drivers for this growth is increase in deposit, growth in private sector credit, and expansion of financial inclusion. We also analyze the company. Generally, NMB is a full service commercial bank located in Tanzania, and it has over 8 million customers with the deposit of 9.6 trillion Tanzanian shillings. And it has mainly 3 business divisions, the retail banking, the wholesale banking, and the treasury banking.
Okay, thank you, Fasika. Skada. My name is Fukari Salamisho, and let's go to the customer segment. So NMB Bank uses 3 kind of operational methods: branch networking, Wakala agents, and ATMs. NMB Bank have won a lot of awards. So let's go to the competitive analysis. The competitive analysis shows that the company, the NMB Bank, is the second in the market share, which is 21%, next to the CRDB Bank. And it also is among the top 3 within the customer deposit and loan. The risk factors, the country factor, as Skadar presented, there is low risk in the country, and regulatory and credit risks are regulated using systems in the NMB Bank. And the liquidity risk, the NMB Bank has more liquid assets, so it is less risky. Concentration risk, NMB Bank uses is dependent on retail deposits, so it is a bit risky, but it's not. This is better in other bank than other banks in the Tanzania. Operational and reputational risk, the reputation of the bank is very exciting, and it shows that the operation process is doing well, and so we can consider the risk factors are almost low. And the ESG analysis, the bank uses bonds for environmental and social initiatives. Additional to those governmental incentives, the governmental incentives are good with the NMB Bank. They are compliant with the global standards, and also they are transparent and accountable. So they're it's very a good company, a good bank.
Hello everyone, I'm Raja from Team B, and I'm here to present about financial analysis of NB banks using Camelis. And let's start with capital adequacy. As you know, capital is special for the bank, and we measure this by using the equity to total asset ratio. This ratio is increased from 15% to 21%, which means the bank is financing its assets using equity, so the financial risk is less. And the second one is asset quality, which means how healthier the bank's loan are, and we measure this by non-performing loan. The non-performing loan ratio is decreasing from 2.43% to 1.03%, which means the few customers are enabled to pay their loans. And the third one is management quality. We measure the management quality through the cost to income ratio, which means how much money we use to generate income. And this ratio is decreased from 52% to 31%, which means the bank is using less money to generate income, and there is a good management quality. And the fourth one is earnings. The earnings are measured through different metrics. The first one is return on asset. The return on asset means how the bank uses its assets to generate income, and this ratio is increased from 3.4% to 7%. And the second one is the return on equity, which means how much earnings the bank generates from the shareholders' equity. Which is increased from 22% to 32%, which means the bank is more profitable. And the net interest margin is increased from 2.04% to 4.5%, which indicates the bank is generating its income from the lending activities. And the fifth one is liquidity. Liquidity means the bank has cash to meet its obligations, and we measure the liquidity by using loan to deposit ratio. This ratio is increased from 70% to 90%, and remain constant 88%, which means the bank uses its customer deposits to generate income by using loans, and it indicates the bank is more profitable and stable with the market. In conclusion, the Camel analysis indicates a strong and improving financial position.
Okay, I will continue to the valuation part. We do our valuation by using the dividend discount model, the justified price to book ratio, and also the residual income method. But we try to present the dividend discount model and the justified price to book ratio because these are the most appropriate measures that we think that to value our company. As we see there, we have the risk-free rate, which is 11.75%, which is like the Tanzania government 10-year bond. We have also the equity risk premium, the country risk premium, and we have also calculated the cost of equity by using these metrics. We use the beta of the regional market banks beta, rather than justifying this beta to calculate the cost of equity of this bank. Rather, we adjust the capital asset pricing model. So we add the country risk premium to the capital asset pricing model to find the cost of equity. And we also calculate the sustainable growth rate, which is 18.22%. We use this growth rate to estimate our future dividends. And also by using these metrics and other values, we got 16,312 Tanzanian shillings by using the justified price per book. And also we get 13,010 Tanzanian shillings by using the dividend discount model. So as compared to the market price as of the January 14, 2026 of 9,060, we can conclude that the intrinsic value is more greater than the market price. So we advise a buy decision or we recommend our investors. And are just the income statements, the balance sheets, and assumptions and drivers. We have both the growth, we have both the forecasted and also the historical data here. So we can you can refer back to these PowerPoints. Thank you.
Thank you very much, President. I have one question. You've said you looked at PESTEL, you looked at OTA 5 forces to understand the competitive environment. For me to understand is what is the unique competitive advantage of an MB? And the second one is what is the biggest risk that could impact your buy recommendation at this moment? Thank you.
I think you skipped your environmental side. Is there anything on the environment side that you feel justifies the buy recommendation?
So I would like to know a little bit about the loan deposit ratio. Do you feel that the bank is actually giving enough loans to customers? Because it looks like the LDR is quite high, getting up to 90% according to calculations. So are they really risking to go out and, put in more loans to customers?
In the Porter 5 force models, from the 5 forces, the customer power is more gives competitive advantage for the bank because customers have a chance or an option to switch to other optional services like microfinances and others, but the banking more customer service advantages and digital banking sectors improve its customer services. So this gives its digital banking system and customer service quality gives more competitive advantage, and customers are flow to the NMB bank.
To answer the second question, what will affect your buy decision if which risk or which factor may revert the decision, I think. So in our analysis, maybe we think that the country risk premium may affect the buy decision because in the country risk premium, there are so many factors, the GDP, the inflation rate, and others. So maybe the change may affect the bank adversely. So if they affect the bank adversely, we may recommend other decisions. So this can affect the bank, like mostly they can affect the bank. So we may change our decision based on these risks.
In addition to that, the concentration risk might affect the bank's investment because it is mostly dependent in the customer deposit, retail deposit. And the other question, environmental incentives is very good. I didn't have the time to continue on that, so I cut it up. The environmental incentives are good as of the NMB. Because it have even it finances using bonds for aspect and other also incentives, and even they have bonus for social incentives to empower women and also to improve medium and small enterprises. So it have a good incentives.
To answer the last question, we use the loan to deposit ratio. We consider only the loans and the customer deposits. There are so many current assets like government securities, special deposits, and like that. So the liquidity risk is less, and we we try to show that is the bank is using its funds appropriately to generate an income. Thank you.
I have a general question, general technical question. For someone who is not in finance, how do you describe beta? Beta.
It's a good one. Also, really like your cost of equity construct and how you build out cost of equity and in how you apply that to the dividend discount model. There was a disconnect. Maybe you can elaborate on how you arrived at the share price, which you end up recommending as a buy.
Me, on the factor of ESG, which factor do you feel will have the highest financial impact to the company?
Okay, I will respond to the cost of equity and to the beta questions. The beta is how the bank will move as compared to the market. When the market moves, how much does the bank respond to the market movement? It is like the beta definition for the one that if the market moves, then how the bank will react. If will it goes up with the market or in other direction? So it's just the movement between the market and the bank. And also the cost of equity, we add the country risk premium to the capital asset pricing model because we can't find the exact beta for the MB bank. So we try to adjust or to modify because if we do not add the country risk premium, the investors will not get a compensation for the country risk premiums. So by making this these values onto the formula, we get the cost of equity, and also we forecast the dividend like D naught into 1 plus G over KE minus G for the dividend discount model. So we have already the 2025 dividend, but even if it is not given, we have already forecasted it, and we forecast the 2026 dividend, and also we divide it by KE and the G. The sustainable growth rate is 18.22%. Rather than using the dividend growth because it's more fluctuating, we made the sustainable growth rate so as to forecast our future dividends. And that's it.
Okay. In the SDG, we recommend to invest in the social incentives are more exciting because they have bonus both for women empowerment and also for small and medium enterprises. So it has been more profitable, and also it is good for the social well-being of the country.
To just add something on KE, we find this idea from Aswad's model. We just to discuss.
Thank you very much, Team B. Very, very strong showing. The judges are really doing a job today. Some of the questions, and I'm in valuations myself, some of the questions I only knew the answers to when I started working. So really, really good job. Really strong showing. You're welcome to stay. I think it's actually better to stay so that you see how the other teams present. But I think we can call the next one.
Good morning, everyone. We are Team C on behalf of the CFA Research Challenge 2025-2026, and we are here to present our evaluation on NMB company. After our we have landed on buy recommendation for the company. We understand that the company is a leading figure in efficiency, asset resilience, sustainability, and profitability within the region. So we recommend a target price of 10,952 with a 36.6% upside. The company is number one in terms of profitability and valuation from the country, and it is number two in terms of market share in net loans, customer deposits, and also in total assets, making it a very significant financial institution. It operates mainly in three operating segments. The largest income coming from retail banking, followed by treasury and wholesale. It mainly runs on interest income and is The largest component of non-interest income is fees and commission, which has been increasing due to the company's investment in digital infrastructure. As we can see, the transaction channels are mainly digital, up to 96%, and the main loan composition are personal loans, mainly backed by salaried loans, followed by agri loans and corporate loans. Now we will move on to the industry analysis.
Hello, everyone. My name is Grace Ambisa, and I will be explaining the industry analysis and where NMB stands in this market. So at a glance, the banking sector has been growing, with its assets reaching 79.4 trillion in assets, and also has been growing over the past 5 years with 50% in profitability. So the global environment is at an advantage of Tanzania, with lowering inflation rates and also lowering FX and a weaker US power. This gives the Tanzanian banking sector a better chance to grow and also to be profitable and also to increase the lending rates. As of the market's macroeconomic environment, the Tanzanian banking sector shows a positive outlook with 6% GDP and also stabilizing inflation rates, and 7 days interbank rate has gotten stabilized. This combines with private sector growth, shows that the banking sector is growing, profitable, liquid, and also shows a positive outlook in the coming years. NMB stands as a leader in profitability, cost leadership, and also assets in asset quality and risk management, with its unmatched ROA, NPL with a small NPL ratio, and also a better cash capital adequacy ratio than it with ESG, and that would be by the staff.
Okay, thank you. My name is Stefana, and I will be presenting about the ESG. So ESG is integrated in the bank with its finance, and it is embedded with 2030 agenda. And in 2024, they have reported 1.5 million ton of CO2 equivalent, but 98% of it is in scope 3. So climate risk is more of portfolio driven, and also 48% and 32% of the workforce and senior managers are in women, and also they have a target of 50% by 2027, and their government is well and disciplined with a scope effect score of 92% and a strong oversight of the board. So for NMB, we recommend a buy based on this 3 theses. The first one is subjective profitability. NMB is one of the most profitable bank in Tanzania, with a net income of 746 billion Tanzanian shilling, and also they have 15.9% of year-to-year growth, and also they have reduced their cost income ratio from 46% to 37%, and also their NPL is healthy with 2.5%, and this reflects a strong earning power and also quality of asset. And another thesis is that their digital effectiveness. They have invested 231 billion in digital infrastructure over 5 years, and they have only 4% of their transaction happening in the traditional branches, and in the their growth is integrated with sustainability. They have issued 400 Tanzanian shilling in sustainability bonds like Jazri and Jami.
Good morning, everyone. My name is Alison. I'm going to present to you the financial analysis and the investment risk. And
the first bank to reach 1.1 trillion in profit before, which is comes from the total revenue increase in 16%, which drive from interest income and then interest income. Then the interest income comes from the loan expansion and the diversification, and the non-interest income mainly comes from the digital wallet transfer fee and the commission fees. And moving on to the cost analysis, we the NMB Bank lower its only increased 10% in the previous 5 years, which makes them it's primarily in the investment in digital banking. And also they managed to lower their cost of risk to 0.97 and their non-performing loan to 2.5%, which total sum up to the cost to income ratio lower to 38.9% from 58% in 2020. And also when we see the return on equity, it has been increased to 24.6%, which implies that they are using their shareholders' money to make a profit, and also their return on asset increased to 4.3%, and which implies that they have a model that implies the see the net interest margin, it is 9.5%, which implies they are getting their money cheap and loaning to the high yielding loan portfolios. And when we see the capital adequacy ratio in 2020, it's 9%, making them to and sharing additional shares, and also have a 70% internal maintain 70% internal capital generation, and their asset quality lower non-performing loss, and also the customer deposits grows by 28%, making them liquid, and also having a risk profile that is very lower risk profile. Moving to the investment risk. This bank have 4 major risks facing up. The first one is concentration risk, which is NMB is concentrated in Tanzania, so any macroeconomic factor will influence them deeply and highly. And also their credit concentration is mainly agriculture, 30% of the to agri businesses, which is depend on the climate changes. If what we see a good asset will turn out to be very bad quickly. And also their cyber security threats, 90-50 plus of their transactions are now occurring in a digital wallet. So any slowdown or hack will influence them, and they are also like under the dividend payout threshold. Thank you.
I'm Barakat. For our valuation, we used a blend of the residual income model and DTM, weighted at 60 and 40% respectively. For our residual income model, it's focused on book value and equity, and we use the assumptions a risk-free rate of 11.75%, which is the 10-year treasury rate of Bank of Tanzania, a bit of 0.52, and an equity market risk premium of 6%, which gave us an equity of 40.67%. And we used a 6% terminal growth rate, which aligns with the GDP growth of Tanzania. And this gave us an intrinsic share price of 11,407 Tanzanian shilling, which is a first 40% upside. And thank you. For our DTM model, we used a 5-year forecast with the terminal value to capture perpetual dividends. And we use the same assumptions used in our residual income model. And using these assumptions, we got an intrinsic price of 10,269 Tanzanian shillings, which is a 36% upside from the current price of 8,140 Tanzanian shillings. And using these two, we got a weighted base target price of 10,952 Tanzanian shillings, which is a 36% upside from the current share price. Thank you.
Thank you very much. I must say, very clean slides. So maybe the first question is two questions. One is on the intrinsic value. We keep saying there is significant upside to this share prices. Yours is 40%. Why other investors are not picking up these 40%? Because in a market like this, usually investors pick up the significant amount of upside. The second one, again, is on cost of equity. If we see Tanzania used to be one of the most stable politically country in the East Africa market. Currently, we have seen what happened during the election period. So it becomes now political risk is one of the issues that's impacting country risk. Why did you chose not to include country risk into the cost of equity, which gave you 14%, which could have been higher from investor expectation perspective? Thank you.
Just want to add to exactly what Tedros just said. Most of your loans are given to personal loans, which is quite high, and then there's agricultural loan. And knowing Tanzania is actually doing very well right now in construction, you have 1% of mortgage. So to me, what I see is that eventually mortgage is going to come up to 2029 or what you have. So why haven't you looked into the mortgage rate coming up, or have you looked into that?
Have you considered comparables in your valuation, best similar, most close banks similar to NMB?
A good presentation. Assuming an aggressive competitor comes who is very liquid, how would you say affects your margins?
My question is on growth. Your perpetual growth 6%. I think you took it from the GDP, the current GDP. So are you going to consider the long-term GDP, long-term growth, or just current growth? If you just consider GDP, what is the source of that GDP growth? You know, sometimes some governments may be very much optimistic. So you might need to triangulate that GDP growth from various perspectives. So where is the source of that GDP growth?
Was why investors picking up on this high upside. That's the question, right?
We did this intrinsic value based on the market value of December 31. As you can see in the Dar es Salaam exchange, the share of the NABB is our intrinsic value. What we did in intrinsic value, it's 14,000. So it's already paid. The investors are already acting up to this intrinsic value. And the second question is about the cost of equity. When we calculate the cost of equity, we use the beta, which is 0.52, which is like a high. I think the country risk. We use 0.52 calculating in Damodans approach, and calculated in to the specific industry now. To the specific industry and bank, so it's high enough to lift up their country and
on the GDP, on the terminal GDP, we got the source of 6% from IMF and World Bank. We got the source, and usually there is an inflation. We assuming a 3% of inflation, there is we got a cap of 9 growth rate, but we use a conservative only, like not incorporating the inflation growth. So we try to be as conservative as possible.
And also on the mortgage, I'm sorry that I forget the question number. On the mortgage, why they are not allowing to the mortgage, they have a huge credit concentration risk. That's why what we are mentioning. When I was presenting, I only mentioned the agriculture, but also when the not active up to the mortgage loan is one of their risk or their blind spot for this campaign.
Adding on the GDP contributors, the main contributors are construction, mining, and also agriculture. And we've and agriculture. And this shows compared to NMB's loans, most of them are NMB loans are in agriculture and as well as in mining, which gives it a positive outlook, I think.
Okay, on the question on the assumption that a liquid aggressive competitor might enter the company, we assume that NMB will remain competitive because it has shown through time that its asset quality, regardless of the market share, has been consistent. Its execution of its strategic plans, such as efficiency and maintaining a high quality capital, will give it a fighting chance, regardless of the size of the entity banks like Citibank, but still NMB is holding a large market share in a different metrics. So we think it would still fare well, even if the margin might decrease because it's only 100% data share of the pie, but we still think it will remain competitive.
On the comparative question, generally speaking, we didn't try to do that. We were more focused on the intrinsic value. As we know, like extrinsic valuation is really sensitive and you need to find there is a really extensive research, and we were not available to do that.
And also, when about the liquidity, other banks are interested. NMB, it has great profit to its share. It has 21% in the 21% of its market share. So it gets like 30 points for profit for its share. So it will make it a push up, not down. And to the comparable analysis, we didn't do the comparable analysis, but we compare them to we compare them to the industry average, not a specific bank. So that will count where we position our company to the market, not the timeline that was the last 2 weeks.
So on the what if another bank came into this Tanzanian banking sector? First of all, Bank of Tanzania holds the highest capital sector. As well as there is a great intent for customers to change from bank to bank. They tend to have a higher cost to change from one bank to another if they have a loan and also a deposit in that company. So that makes it really hard for other banks to outpace NMB. Yeah, that's all.
Thank you, Team C. Good job. You're welcome to sit. You're welcome to sit. And we can call the next team, please. Good morning, judges, CFA Society, and distinguished guests. We are Team D, and we are here to present our equity research on NMB Bank PLC with a target price of 15,536 and an implied upside of 35%, and our recommendation is a buy. Our four main pillars are strong agriculture, portfolio, technological innovation, MSME focus, and NMB's pioneering sustainability growth through Africa. To go through the macroeconomic overview, Tanzania has a resilient economic growth with real GDP growth rate of 5.4% in 2024, and a notable foreign direct investments reaching $1.7 billion in 2024, and a strong private sector momentum with credit to the private sector growth of 15%. The government of Tanzania has transitioned to an interest rate-based monetary policy recently, and has a central bank rate of 6%. And the overall banking sector is dominated by large banks, and the two banks are NMB and CRDB, which constitute to the total asset of by 47.5% of the total banking industry. And for the Porter's five forces, industry rivalry is a high threat, and threat of substitute and bargaining power of buyers is also high to moderate threat, and bargaining power of suppliers is assumed to be low, and threat of new entrants is around low to moderate. My team member will go through the NMB.
So coming to the company's overview, NMB operates through three main banking segments, which are retail banking, wholesale banking, and the treasury. The retail banking generates the majority of the revenue, which is driven by its loan in agribusiness, MSME, and mass retail. The wholesale banking serves the corporates and public institution, while treasury generates its income through forex trading and investment in government securities. The company's key value proposition relies on its extensive physical network, digital leadership, agri and MSME expansion, and its commitment to ESG and sustainability. Competitively, the company has above 20% market share in profit, loan, and customer deposit, making it a leader of above 30 commercial banks. The company's NPL and cost-to-income ratio relies below the industry average, making it stand out even more and attractive to investors. The company has four major risks that we have identified, which are macroeconomic, regulatory, credit, and operational and technology risks, which can be mitigated by diversification, capital buffer, tight underwriting, and ongoing cybersecurity investment. This is the Monte Carlo simulation, and now my friend is going to walk you through the financial.
All right, so having those in mind, let's look into the financial analysis of NMB Bank. So these are the main segments we took: the profitability, income, the balance sheet strength, and the capital, asset quality, and liquidity. So for visualization's sake, the company has a strong earning momentum, high asset quality, with low cost funded base. So as you can see, there's a wide spread between interest income and interest expense, marking an efficiency in how they generate their revenue with low cost. And deposits, loans, and profit after tax has seen a year-on-year growth comparing the 3 quarters of 20%, 14%, and 15% respectively. And the profit after tax is projected to have an annualized growth rate of 20% in the upcoming years, according to our forecasts. Having that in mind, let's look into the thesis. Our first thesis is, as the company put it, agriculture is one of the main pillars of the banks, and agriculture contributes 26% of the total GDP to the Tanzanian economy, and it's also in line with DIRA, that's the Vision 2050 they put, making agriculture a priority. And NMB has officially passed the trillion shilling mark of portfolio size. The second thesis would be technological innovation. Now, through technological innovation like Kikundi, GUK, and LIPA, NMB was able to connect 4 million plus rural customers with 73 plus thousand Wakali agents. And this is a 50% jump from 2022. And the key point is here, NMB settled 96% of its transactions digitally, marking a very high momentum. Our third thesis is MSME focus. Now, Tanzania quietly has one of the biggest MSME industries in the region, with over 27 to 35% GDP contributions. It's an underrepresented segment, but NMB is there to capitalize as a first mover, with total loans dispersed up to 4 trillion shillings, which is keeping up its strong foothold in the sector. The last thesis would be NMB's sustainability-linked instruments, being the first, as mentioned before, being the first in the sub-Saharan region, which is Jasiri and Jani bonds. These are two sustainability bonds issued by NMB, and they received an overwhelming of those in the class listings at LSE, Luxembourg Stock Exchange, and the Dar es Salaam Stock Exchange. 99% of the investors are local. Also, it's important to note here the global DFI institutes like IFC and BII also back this. And the ESG section detailed walkthrough will be, you'll go with my partner.
Okay, thank you. As you mentioned in thesis 4, here is ESG part and evolution of ESG journeys. NMB. So NMB launched the first Jasiri bonds, or the first NMB. The first ESG in 2023. With standard implementation also accounting finance standard, and also implement Agenda 2030. Here is a pillars. One, they have impact on carbon footprints, climate risks to and green finance through GEMI bond. They are exchanged through 3 different exchange centers. The first one is Dar es Salaam, and the second one is London, and the third one is supporting sustainable United Nations development goals, affordable and clean energies, industry innovation, infrastructures, responsible consumption, productiveness. The second pillar is social. So, as we know, social is financial inclusiveness and things that come from financial products that come from Jasari, loans and agri businesses, the small and medium support. So in terms inclusiveness, 9.9 million. Agents and more than 4 million rural customers. And in terms of staff proportion and gender composition, almost half, 51 and 49 composition. Here is a government pillar. This is one of the major in banking sector. So they are early adopters and IFRS S1 and S2. So robust oversights and zero breach in anti-money laundering.
Thank you very much. So I'm going to walk you through the valuation. So for the valuation, we did 2 kind of valuation mechanisms. One is the income approach. The second one is the market approach. Under the income approach, we did audit. And for the market approach, we did company comparable analysis and precedent transaction. And just to show you a quick glance we did a top-down approach where we pegged NMB performance to the macroeconomic status of the country, which is the GDP, and other line items being calculated using historical average or pegging them to the necessary key assumptions. The second assumption is our cost of equity. Our cost of equity, we took 12.8%. To show you, okay. Visually, to graphically show you the visuals of our valuation, we did football field chart where our D6 we the necessary model. Our perceived correct weighting for each kind of model. So, this would be. Thank you very much. Look forward to your question and answer. Thank you.
Thank you very much. Very good presentation, very good slides. Very good cohesion as well. I think my question is, given that I can see that you have done a little bit of advanced analysis, including Monte Carlo analysis. There are two questions I have. NMB, 96% of the, more than 90% of the transaction is going through digital now, which is a big advantage to the company. But if you look at Tanzania, the two biggest risks, or the three biggest risks that the country is currently facing in the banking sector, is one is credit risk, FX risk, and then cybersecurity issues. And given that the company is heavily dependent on digital means, have you done any scenario analysis when it comes to cybersecurity? And then also now, because of the political situations in Tanzania, has been severely impacted, meaning FX, ex-Tanzanian shilling has been impacted significantly. Have you looked into that and then factored that into the scenario analysis? Thank you.
Good presentation. Have you done any analysis on the governance of the company, the leadership?
To continue on the governance question, have you done any, what governance risk would you say affects the valuation of the company?
As part of your macroeconomic analysis, you indicated that the Tanzanian government has moved or migrated towards interest rate-based monetary policy. Can you please describe that to us and its relationship to the valuation of the company and growth in general? The other thing that you have indicated in your macroeconomic analysis that Tanzania is right now adopting central bank interest rate of 6%. What does that mean?
Excellent presentation. I think towards the end, it was a bit rushed. I wished you had spent a little bit more time discussing the valuation and how you triangulated in arriving at that. So I personally would give you another extra minutes, 2 minutes more to spend on that.
Thank you very much. We will address your question respectively. To start off with the valuation thing. So we actually had an appendix of each evaluation mechanism. So for the first one, we did dividend discount model, which we used the dividend that they pay and discounted to present time to come up evaluate the current company based on the DDM. So for dividend discount model, we did two kind of dividend discount model, where one of it is a perpetuity method, where we used terminal growth rate, where the dividend grows at a perceived growth rate of 8.9%. That would be the nominal GDP as well as the dividend growth rate from 2020 to 2025. So it calculated well for our terminal growth rate. For the cost of equity, we used 12.8% using a 5-year treasury bond of the government, which is 11.5%, and care premium risk of 13%, and beta of 0.1%, 0.1. For dividend DDM model, the second one is the multiple method, where we use book value to come up with the equity value per share. The other income approach is the residual income approach. The residual income approach is basically the difference between net income and the cost of equity of that, the cost of equity or deducted from that net income. So for that, it is put in that manner. We also did sensitivity analysis based on the country's GDP as well as the market share in the bank, which highly affects our interest income and interest expense, which is the core business of NMB Bank. The other one is also the free cash flow to equity. It has a pretty standard format, but one thing we implement in statutory reserve is a peculiar thing in bank valuation, doing free cash flow to equity. This also was suggested by CFA Ghana society. Okay, thank you.
Okay, let me address the question I think Mr. Saladi raised. In the governance, yes, we see the governance in terms of ACG as governance pillars. As we know, governance is the main things in banking sector. If the governance or the boards are not effective, it's maybe the operations or any profitability may not be achieved. So we see that because NMB applied ACG as part of the governance, like they have overseas board, oversee አላቸው, sorry, and they have also so robust oversight, dedicated board ACG committees, and also risk, including the risk ones, oversight. So they adopt or integrate ACG as a governance, implement in as a key performance indicator in reporting. So we see that the governance has experience more than 15 years collectively. So they have measured in non-performing loan, operational efficiency. So as a team, we conclude the governance are good.
To add on the governance question, so a bank's most important asset is its employees. So based on its annual report, we saw that NMB's employee retention rate is at 98%. So I think it's safe to say NMB's employees are going nowhere in terms of retention rates. And FX volatility, digital banking risk. We've looked into that risk, but looking on the annual reports of the NMB's bank, they've hired more than 20 employees directly related to, tech IT operations, and more than 20 of those are dedicated to securing its firewalls and cybersecurity. So NMB is taking the necessary precautions in aligning with cybersecurity protections and guarding itself against any irregular surprises. So I think, I think you mentioned an election question, risks about the election, someone mentioned. Oh yeah, the effects. We've looked based on the historical data. The Tanzanian shilling has seen a 10% volatility over the past 10 years, a 16% volatility. And to look into that, the election had a small shock, obviously, on the market. But post-January stock price, looking at NMB's share price, it has been rallying, not just increasing, but rallying at an increasing rate. So investor confidence is still secured. And it's looking good for NMB.
To add on the forex exchange reserve, so actually the NMB bank had increased its foreign exchange, hard currency foreign exchange from $5.5 billion to $6.5 billion. So that shows that's from 2023 to 2024 that a strong forex reserve. So would buffer some of the are pushing are pushing through forex exchange, but they will definitely have a buffer in there. The trend has been showing a very constant growth over the years.
Okay, on the question, Million raised on the macroeconomic. So when we say interest-based monetary policy, government is choosing to control the money supply, inflation, and overall indirectly by changing the interest rates that banks and other rates like treasury bills and all that will trickle down from the central bank rate. So increasing that rate would trickle down to every lending rate and all that, and decreasing the money supply and all the rate of the bank, the treasury bill, and FX. So overall, the central bank rate is the rate that the government uses to affect the interest rates of banking lending rates, treasury bill rates, and other.
So it's also worth to mention that Tanzania just went through an IMF program. So interest market-based monetary policy is like the interest rate is based on the market's mood, so to speak, the demand and supplies of if for an economic awakening, it can loosen its interest rates. So it's more based into the more capitalist side and market-based approach instead of more regulatory tightness.
Oh, thank you very much. But I feel like more question has not been addressed, especially Mr. Saleh, in terms of governance and valuation. So actually, one thing we did include the governance valuation through the president transaction analysis we did. So president transaction is a transaction, it's kind of an M&A that happened across Africa for the only data we can get is from 2025 to up to 2013. So one of the things, if you see down in the bottom, it says control premium. So control premium, according to Aswan Damodra, it says entirely depend on the management of the company and its governance. So he mentioned it is fair to give a good company from 30% to 50% of control premium, and we gave it almost the highest. So if the governance was not as we thought it is, or it's not as efficient with our data implied, we would not give.
I think you're the first team to answer more questions than the judges asked. So well done, guys. Really, really, really good job. Well done. Go ahead and take a seat. I think we have one team left, and then
Thank you.
The different team.
Wait.
Hello, everyone. Yeah. Yeah. And thanks for the opportunity to compete and things like that. We appreciate this competition being started in Ethiopia. My name is Afomia, along with my team members, Abebe, Khalid, and Oliad. We are Team E, and we will present you about NMB Bank PLC. And I'll just kick off with the business description and the industry overview. In general, we recommended a buy strategy. Even since from December to February, the share price of the company has really gone up. So with the target price of what we assume it would be by the end of the year, We have a target price of around 16,550 Tanzanian shillings, 2,000 shillings. That is around 18.1%. NMB Bank was established in 1997. First, it was a microfinance, then it grew into a bank. It has over 200 extending rural areas and many applications of digital banking. And its services are retail and corporate banking, savings, digital banking, things like that. It has over 4,000. Sorry, its CEO is Ruth. When it comes to the strategy, we must ask, it's one of the biggest banks in Tanzania. In market share, it's second, and in profit, it's first. It was the first bank to surpass operating. So we are obviously going to ask, how did it get here? The first one is technological innovation. It has invested millions and millions of shillings in the last 5 years for technological innovation. It has worked on digitizing most services. Now, over 90% of transactions are held digitally. So that's a big thing. The second thing is financial inclusion. This is making sure that the bank is reaching rural areas and opening branches where banking is usually not accessible. It also has an approach in which someone can open bank accounts without going to a branch. They can open a bank digitally, and now their phone number can be their account number. This has created a big amount of growth. The third one is service diversification. It has digitized many village community bankings, VCOBAs. I'm going to one moment in Amharic. And so it has digitized that process. So it has mobilized so much funds with that too. Other one is partnership with fintech companies and Mkoni mobile banking. It's a super app that even allows you instant loans, things like that. Because of that, we can say it's doing exceptional. When it comes to financial performance, it has, as I said, surpassed 1 trillion Tanzanian shillings. Profit after taxes as of December 2025 is 7 billion. And its share prices is over 14,000 shilling, as well as its market capitalization is 9 billion. The bank has shown a profit growth of 16%. So that's a huge amount for a growth. And industry overview, in general, Tanzania is a growing economy. Its CAGR is supposed to be around 10%, and it's also supportive for the banking sector. So that makes it an attractive investment option. Its capital structure is 10 to 12%. And this bank is at a steady rate of 18%. So that shows that as a depositor, it's safe and it's reliable so that I can take out my money if I'm a depositor. So that creates more trust. When it comes to asset quality, total assets have also grown from 8.7 trillion to 17.2 trillion within the past 5 years. The non-performing loan ratio has asset management. Earnings have also gone up to $750 billion. By earnings and operating income, I mean earnings are after taxes, and it's the net. So we have gone really, really high up in the 5 years. And the causing factors could be 1, increased lending, 2, operational efficiency. They even use AI for collateral-free loans and things like that, and also effective cost management. The other one is competitive positioning. The market share of NMB Bank is 21.8%. So if you see that NMB highest, why is it second here? And that's related to amount of loans and amount of assets. This only proves to show that NMB is more effective than CRDB Bank. So we think it's a great bank, and to achieve this share price, what I have mentioned earlier, going to the rural areas and making banking more accessible and easy, even without the branches, has helped a lot. Other than that, the strong brand recognition with staying in the banking industry for over 20 years has helped a lot, and technological investments have also increased that. For Porter's five forces, most of the risks, as you can see, are low to moderate, other than competitive rivalry, which still we can say the bank is doing good, and the bargaining power of customers can be attracted by making the banking system more staying efficient. The threat of new entrants is moderate. It's fair to say it's on the lower side, just because there are other. You can say it's moderate. Because technically, to open a bank is no easy amount of capital, so we can almost say it's low. Even threat of substitute is also low. So given that, it's very fair to assume it's a good place to invest in. Pestle analysis, most of the factors are showing positive things. In the interest of time, I'll just focus on one or two. Technological factors is one the bank should really watch out for. The technology is advancing and we want more things digital, faster, quicker. And NMB got to catch up with that. And we still think it's doing a good job by updating the app and keeping things digital. And other than that, the economy is mostly supportive. The political factors, the legal factors is mostly supportive. And environmentally, it's still doing good, which my other teammates will present about. Next up, we'll go to valuation by Abebe. Thank you.
Hello, everyone. My name is Abebe. I am from Team A. I will present my part of the study, which is valuation analysis. As valuation analysis, we use dual model approach because this model approach is able to get more balanced and reliable estimation of valuation. So I will start to calculate or determine cost of equity by using capital asset pricing model. By using capital asset pricing model, we obtain cost of equity through risk-free rate 11.75% based on the latest Bank of Tanzania 10 years historical trend. Equity risk premium obtained from market risk minus risk-free rate. Equity risk premium, which 6.5% for entire market adjusted. And beta 0.65, reflecting NMB bank lower volatility relative to index, and cost of equity obtained from this 11.75%. And we brought to obtain intrinsic value of the bond or the share, Gordon's model. Upfront dividend in 1,028.85 Tanzanian shilling and 25 forecasted dividend Tanzanian shilling 5,510.33 projected 19% growth based on historical trend and terminal growth rate 6.1%. Based on through this process, intrinsic value of the share 5,165.28. Metric relative valuation or forward price earning ratio. So forward price earning per share in 2025 Tanzanian shilling 1,500 Tanzanian revenue, and target price earning ratio multiplied 9 times. So implied price that means Tanzanian shilling. Thank you.
Okay, thank you for giving me this chance. My name is Halin Wad. My part is financial analysis. On the financial analysis, we perform profitability analysis, liquidity ratio within current ratio, quick ratio, within profitability analysis. Within profitability analysis, return on assets and return on equity, we evaluate that. When you see the summary of financial metrics, the total assets increasing throughout the year, we take the 5 years. So from 2021 up to 2025, the total assets increase. Also, net profits also increase. The revenue also increase. And then the return on asset, it's also increased. Return on asset is net profits divided by total assets. When we see return of equity, okay, these financial metrics we evaluate. We use to evaluate the, and then we also profitability analysis, net profit margin, return on equity, and return on asset, and also liquidity analysis, current ratio, and quick ratio. In general, we as we evaluate the financial performance of NMB banks is strong, and its current assets is stable, quick ratio is stable. So thank you for giving this chance.
We have to start, and now I present our investment summary. In summary, based on our goals, we recommended A by Ocean because the market price, which means target prices 16,550, which market prices 13,519. And ESGs. ESG means environment, social.
Presentation. Thoroughly enjoyed it. I'm going to give you a question that would allow your presentation. That was deliberate. So take maybe 1 minute of this question and answer to continue on discussing on evaluation model, because that's a part that would interest me. You know, I'd like to see the technical aspects of can this developed or not. That's a question I have.
You told us a good narration about the background of the company, including the fact that this mostly was microfinance, which is a good thing. As you know, generally, a company, the CEO of a company takes a significant value in terms of value of the company, overall performance of the company. But you didn't tell us about a little bit about the CEO, her background or his background. How long did he work? Did he work? Is he going to stay there? So a little bit, can you enlighten us about the CEO of the company?
I think you're the highest compared to printers, and what operational constraints would you that will affect this scale?
Not in numbers, but in storytelling. What are the threats that this bank could face? Because everything looks so rosy. Is there anything that you could say could threaten this?
For me, I would like to know if you've looked into the payout, how much have they paid out from the profits the last month? What's the expectation for the future? What percentage of payout?
Thank you again. Valuation, the definition of valuation is estimating the process of estimating the value of stock in a PLC. So I will use dual model approach used. So dividend payout ratio 30% and return ratio 70%.
Valuation.
In valuation, dual model approach in 30% from dividend discounting model and 70% from relative valuation model. We used the dividend discounting model, we used Gordon model and relative valuation model, revenue per share, price earning ratio.
Okay, when it comes to the operational constraints, it's just going to be a bunch of foreign exchange fluctuations and inflation for the most part, because inflation would reduce the ability of people to save, and that is expected to maybe reduce the amount of deposits. And we still looked at it at a positive light because we believe that getting more people will mobilize more savings. Other than that, the competitor could also be a threat, but that still wouldn't stop it from being among the top 2 or 3 banks in Tanzania.
And the dividend payout ratio is 33%.
Yeah.
Thank you, Team E, for your presentation. You're welcome to sit down. Good job. Thank you, judges. I believe that brings us to the end of the first round. So we will take a short break. Our judges will tally the results of both the presentations and the graded section. I think we can perhaps take a 15-minute break, and then we'll proceed with the second part. So the second part will be where the top 2 teams will go head to head, final style, and then we'll select a winner after that. Thank you, everyone.
Yeah, did you need?
Hi, everyone. The results are in. I know we're all buzzing with energy from round one and analyzing the performance. We need to proceed. If we can take our seats, you're welcome to sit with your coffee and your food. It's still working. Thanks, everyone. If we can take our seats, it's not me. Thanks, everyone. You're welcome to sit with your coffee or your snacks. The results are, everyone is waiting with bated breath, eagerly anticipating the top two teams. And before we announce the top two from all the teams, remember there are no winners and there are no losers. We're all learning, including the CFA Society, given this is our first event. So thank you all the teams for coming out. But there has to be a top two in this case, and the top two will go head to head. Now, before I announce the top two, for this second round, there'll be no time extensions because you've already had a chance to go through your presentation once. So this is just a refined sort of presentation. You also have had an opportunity to hear the judge's question, right? So you might want to think about how you incorporate the presentation we're doing now, because this is now for the win. Without further ado, the top two teams are Team C. Oh, if I call you, you're welcome to stand up and go to the waiting or holding area. So Team C. And Team D. Okay, so without further ado, I think we can call team, I think they've stepped out. We can call Team C back to start their last round presentation. And for the judges, remember, as you evaluate this round, the winning team is the team that will represent Ethiopia in the regional finals. Yes. So for the other teams, teams A, B, and E, really well done. I think if we can give them a round of applause.
Good morning, judges. Thank you for advancing us to the second round of this research challenge. So we will be doing the presentation again. So as we said earlier, our recommendation for this bank is a buy with the 36% upside. We think that the bank is a very attractive investment opportunity. We think that there are factors that haven't been considered in the pricing of the share by the value in terms of efficiency, asset resilience, and being a pioneer in ESG leadership. The bank is, since its establishment in 1997, it is now the leading bank, the leading financial institution in the country in terms of profitability and valuation. It has achieved historic milestones throughout the years, and it is also second in terms of market shares in net loans, customer deposits, and total assets. It has been awarded numerous times in its efforts generally in banking and as well as ESG, and it's rated B1 by the Moody credit rating agency. So it operates mainly through three operating segments. The largest income generating segment being retail, which is also a great constituent of the interest income of the bank. And as we can see, most of the transactions are carried out by non-traditional non-branch methods. Around 96% of it are traditional, and the loan composition is mainly through personal loans, and these personal loans are mainly through salaried loans, which makes it high quality in terms of assets.
So moving on to industry overview, the banking sector has been growing with 18% year on year in asset, and also a compound annual growth rate of 52% in profitability. The macroeconomic, we can see the macroeconomic environment with the bank's clearing balance. As we know, the bank's clearing balance shows if the bank's clearing balance is growing, it shows that there's more liquidity in the market, resulting to a 7-days interbank rate to stabilize. And then the next question is, when banks' clearing balance increase, does banks also are banks lending or are they just keeping the money? And then we can prove that with the growing private sector credit growth with 16%. This shows that there is liquidity, profitability, and also positive outlook in the future. Yeah, so NMB in this market stands in three things in particular. It's a leader in three things. One is profitability. Second is efficiency with cost leadership of with cost to income ratio of 38.6%, and also its asset quality and risk management are the best in the market. Next is ESG.
Okay, so ESG is integrated in finance. That means they're looking in the longer term growth too, and it has included or it has a gender bonds like Jami Jazri. They are inclusive, and they also have non-exclusive and exclusive board members. Like the CEO, David is he's non-exclusive, and the CEO is Ruth. And she is exclusive board member, and also they have digital efficiency, which means they're investing in the digital sector, and only 4% of the transactions are happening in the traditional branches. As she said, only almost 96% of the transactions are in a digital way. Thank you.
Good morning again. When we do the valuation part, we do it with two aspects. The first one is analyzing the revenue and cost, and the second approach we took is the Camels approach, which is the first one is the capital adequacy ratio. To calculate the capital adequacy ratio, we use the tier one, which is consists of high quality shareholders and the returned earnings, and there is no in their equity there is no such high risk equity, and also they have 9% buffer, which makes them above the regulatory requirement of Bank of Tanzania, and also they okay, and also they have sustainable. They can generate 17% of internal capital generation by paying 33% of dividend payout. This was shown in their agenda 2030, and also asset quality. They have been growing by 14 to 16% each year in their loan profile, but they make it to lower their non-performing loans to 0.5%, which and also they have increased their customer deposit rates by 28% this year. So they are expanding, which shows that they are expanding. And in their agenda 2030, they are telling us they are plan to expand beyond the Tanzania, which minimize the risk of concentration, which one of the risks they are facing was the concentration risk, which is because they are mainly concentration in the Tanzania macroeconomic factor was highly affecting them. If there is a change in the interest rate, foreign exchange, they will be highly in danger. But now they are expanding, and also they are using AI or digital platform to grow more and to look out to catch up to the future. And based on in this slide, we can see that their revenue per employee have been increasing. This, in spite of they are using the digital platform, they are optimizing their employee to get a high revenue per employee percentage, and we forecasted this to the next 5 years. And also, one thing we noticed when we forecast, we use a conservative approach, but their return on equity keeps down, which is common to banks when their assets grow, and when their assets grow, their profitability usually cannot keep up with their profitability. That's why the return on equity keeps downing, and they are using different mechanism to optimize this. Sorry.
Okay, now moving on to the valuation. We used a blended approach of residual income model and DDM, weighted at 60% and 40% respectively. We intentionally did that to account for sensitivity of DDM to terminal growth rates, and we also believe that the value of NMB comes from their high return on equity and book value. We use the risk-free rate of 11.75%, which is a 10-year treasury rate of Bank of Tanzania, rate of 0.52, and an equity market risk premium of 6%, which led us to a 14.67% cost of equity, and using a 6% terminal growth rate, which comes from the GDP growth of Tanzania. We got an intrinsic value of 11,407, and on the discounted dividend discount model, we use the 5-year forecast terminal value to capture their perpetual dividends, and we also use the same assumptions that we used in our residual income model, which led us to an intrinsic share price of 10,269 Tanzanian shillings, which is a 26% upside from the current market share price that we used at the end of 2025. And using this tool, we got a blended base target price of 10,952 Tanzanian shillings, which is 36% upside from their current market price. Yeah, thank you.
So my question is on ESG. So when a company has an ESG or a strong ESG, that basically means they actually pass it to their customers. So I want to know if you've checked and seen if this company has a strategy whereby whenever they're giving a loan, they're also applying the ESG standards and guidelines that they have.
Thank you. I have two questions. One is, you are now privileged. You have seen all the presentations from the other teams. Do you still think 36% is the upside is still sustainable? You stand by it, or you think it's different? The second question is cost to income ratio. Usually cost to income ratio of 38% in the banking sector is really, really great. Now there is a stiff competition regulation and all those things happening. Do you think this will be a sustainable cost to income ratio to use for the 5-year projection that you have done? Thank you.
Thank you. To lower your price today, what would be reason?
Pardon, ask the question again.
If you have to lower your target price, what would be your reason?
My question is still on dividend. As you said right now and previously, the dividend payout ratio is about 28%. Of course, I know there are even some companies that they are saying for the coming 5 years or 10 years, we are not going to pay out dividend. Still they sell the shares. So how do you convince me that despite the fact that the company might continue to pay out dividend at this lower rate, how do you convince me to buy? In some companies to the extent says that we're not going to pay dividend. Still, they promote the shares to be sold. They believe that their shares, their stock could be sold on the market, despite the fact that they are not dividend payout. Still, in your case, the dividend payout ratio is pretty much low. You're trying to convince me that, please explain.
What was the reasoning behind the choice of waiting for residual income of 60% and 40% for the dividend, gross model dividend, DDM model? Yeah.
We have discussed and came up with an answer for the CIR cost to income ratio. 8% is said as a great for banking industry, and this is usually actually obtained by making their transactions digitally rather than paper-based transactions. So in the next on the Agenda 2030 plan, they plan on further improving their CIR ratio to 35% with their technology, AI optimization, and etc. Yeah.
On the first question, whether they extended their ESG principles to their customers, if they include their customers in their ESG principles. The company works extensively on financial inclusion projects. They have raised Jami and Jasiri bonds, as we mentioned earlier, and Jami bond is a gender bond. It is specifically for empowering female workers, female entrepreneurs, and as such, I think they are making a social impact by, empowering women into the workforce, so as they are not held back by funds, and additionally, I think most of their, as they are a bank, most of their carbon emission is not directly from them, it's third-party emissions. And seeing that they are also working on decreasing that, we think that not only to customers but to stakeholders, they extend their ESG principles.
They also make sure that it aligns with IFRS S1 and S2 and other frameworks.
Okay, for the weighting of our valuation, we intentionally try to give more weight to the residual income model, because to our understanding that the industry standard also, we believe that their value comes from their value and return on equity. And also we believe that because the DDM model usually more sensitive than the residual income to terminal gross value, we try to mitigate that by giving more weight to the residual income. That's our reasoning behind the weighting.
Adding back to the CIR, they are, as we forecasted in our model, we are reached to in 2030, their CIR will be 37%, but they say we will lower it to 35%, and they are expanding and using AI. This is as we all know, is incorporating such things need a first initial investment. So their cost, we are hoping their cost will be this initial investment. And also adding to what would be the reason to lower this price, the target price. And Tanzania is recently the political factor would have greatly influenced this price, and other not qualitative part but quantitative, the quality part or other factors politically and other things we will consider them and we will lower it down. Majorly the political factor. And without paying a dividend, why would you buy this share? Will be answered by like the first one is the NMB bank is traded in a Dar es Salaam exchange. So even though if they don't pay our dividends, the price will continue to appreciate. So dividend is not the only gain we will get. We will get the price appreciation gain for our investors. And
I think on the first that would you still keep the price despite generally speaking, I don't think we would have kept the price because now we have seen that the current price is over than what we valued, and we would have maybe projected a more growth and maybe increase the cost of equity to kind of understand why the market is valuing the company that price, because I don't believe the market is being irrational.
And when we calculated the cost of equity, we used to give what we did in the back. We calculated our beta based on the modern approach, but we assume that banks overall globally have the same risk. So we use the unlevered beta of global and we lever it to this specific bank. So our beta 0.5, despite it says 0.1 in the market, it's still higher, and we have other reasons to defend our beta, because in Dar es Salaam, an exchange like Dar es Salaam, there's a few company, and one huge transaction will affect highly of this company. So they will make our share will drop down if there is such things like a large transaction of any company in the market.
yeah, despite saying that, we still believe the company is valuable and we assume that's the share price is gonna grow. We just try to be as conservative as possible in our assumptions and our projections of their net income. Maybe after now learning this, we would do better.
Yeah, and also we took to give you the background, we projected the net income by 12%, despite in 2025 only it's grew by 16%, 13.5%. We project only in 12%, and we use the average to get to this value. We use the average of high and low of the past 5 years, and also.
Yeah, we try to be as conservative as possible. Thank you.
Thank you, Team C. Are you welcome to take a seat? I think we can call Team D now for the final presentation. Okay. Hello again. I hope you're not bored of us. I will just give you a brief overview of what we presented and key unseen footages of the presentation that we skipped. So in the macroeconomic overview, as we said, the GDP of Tanzania has been growing at 5.4% in 2024, and the banking industry has been dominated by two banks, mainly NMB and CRDB, constituting around 47.5% of the total asset of the banking industry. So we'll focus on the risks, financial analysis, and valuation.
Okay. So when we come to the company's overview, the wholesale banking has been providing syndication, project financing for the corporate and public and corporate customers. And the treasury segment was the one that generated the company's bond, which was the famous Jami bond, which generated about 400 billion Tanzanian shilling for the environment. And when we look at its key expenses, we see 57% staff expenses, which was dedicated to staff satisfaction. It was 45% in 2019. And at that same year, they had internal employment of 17%, and now it has increased to 91%, which justified and indicates goodness of the staff expenses increment. Plus, the other key component of these expenses is their expenditure, their expenditure increase in the operating cost of technological related stuff. And when we look at its risks, the unmentioned part was that the company's agricultural and credit risk has been reduced because the agricultural risk has been was predicted of the reports to be favorable for its agricultural customers. Plus, the credit risk is reduced with their 102% NPL coverage ratio, which is a great buffer. And now my friend is going to walk you through the financial analysis.
Maybe to give you some perspective on comparable analysis on the financial analysis side. So there are mainly two. So mainly, as my friend mentioned, 47% of the total assets are dominated by so 47% of the total asset in the banking industry is represented by only two major banks, CRDB and NMB. So it would be worth mentioning CRDB's capacity in relation to NMB's main competitor. So we can't really put a finger on who dominates the Tanzanian market in terms of return on assets and return on equities and NPLs. They basically hover around each other for the past quite a few years. So currently, the CRDB has a return on equity of 27%, but NMB closely follows at 26%, and its total assets has risen 19% year on year. This is greater than CRDB's, and CRDB and NMB likely have the same return on assets. One is 5% and the other is 4.9%, basically the same. So the loan to deposit ratio at NMB is at 89%. They're more or less similar, but NMB more or less captures the market while being the first mover in rural areas, sustainability, and other sorts of underrepresented and undervalued segments of the market. Now, the next part of ESG will be covered by Kandi.
Okay, thank you. To cover the parts of ESG, how we integrate to our valuations. So here is our integration and embedded ESG in core de-risking and balance sheets, accelerating free growth and also securing structural funding advantage. So the first one is risk mitigation through climate screening loans in agriculture. So we can minimize through risk mitigation. The second one is revenue growth. So sustainable bond, we raise almost 400,000 billion Tanzanian shilling through Jami and Jersey to create this fee income and other. The third one is funding advantage, ESG excellence secures low cost deposit, almost 85%. So how we integrate this ESG to our valuation rather than applying separate ESG premiums or give to the valuation, we treat NMB agenda 2030 as a fundamental driver and ensures long-term performance and resilience base case forecasts. Thank you.
Okay, thank you very much. I'm going to give you the side of the valuation that I'm not able to present. Just to give you a quick refreshment of how we did the valuation. So we used the approach for the income valuation. But I want to stress the market approach, which is the comparables in precedent transactions. So for the comparables, we took two kind of comparables. One is the price to equity, price to earning ratio, and price to book ratio. So using that, we tried to include companies that are as effective as NMB in terms of operation as well as in scale. So we didn't want to include all the banks that are existing here in Sub-Saharan Africa and East Africa. out of the 10 banks that are listed here, one of it is from Bangladesh, because we feel like Bangladesh is one of the growing economy, and for that reason, we want to include them just to have a holistic view of the comparables. So most of them, as you can see, is Kenyan banks, South African banks, and Tanzanian bank. Doing that, we had we did an average, median, maximum, and minimum, and we took the average for our computation of equity value per share, which is 12,557 for price to earning ratio and 10,178 for the to PB ratio. So the other market approach that we used is precedent transaction. It's difficult to get a precedent transaction here in Africa, especially if you don't have a proprietary database, but we included data from Cytan report, which is found in Kenya. So they published one report of precedent transaction that dated from 2025 to 2013. So we just gave it them, so Cytan report gave us only price to book multiple. So we used that. But one thing we understood while doing the precedent transaction is most of the transactions that happened they don't have a control premium added to them. They basically trade to one time the price to book value ratio, which seems very odd for us because when you buy a company, you need to include them some kind of control premium. So taking into that into our analysis, we want to give NMB Bank the control premium because their management is highly efficient, as well as their operation is very good. So we just want to give them, we wanted to give them control premium, and based on standard or best practice of models, which is determined mostly which is mostly given by Aswad Damodaran. He said like to give 30% to 50% based on the company's performance and stance. So we took an assumption that NMB NMB earned to have a 45% control premium included in their evaluation. So using that, we multiplied it with 1. Which gives us a 13,986 and equity value per share. On our own analysis, we gave a rate of 136 Tanzanian shilling and trading at 4,430 Tanzanian shilling. Close to our target price, and mind you, we did our modeling, we did our valuation when the price is, we took a cut price of 11,500, which was at the beginning of February 6th. They had like 11,500. They had like 11,500 trading price. So that would conclude my presentation. Thank you very much for taking your time to listen to us. We would love to have the question from you. Thank you.
Thank you very much. If you can put the slide on the football field chart. So one of my question is on the cost of equity, and then also the residual percentage that you have used. One is you've seen the other presentations, you have heard the judge's question, especially on the cost of equity side. Do you still maintain 12%? The reason why I'm asking is 12% is very low for Tanzania. So that's the first question. Second question is, in terms of some of the comparables as well as transactions that you've used, I have seen that you have included outliers. Because in the banking sector, 3 times or above is very unique, and those usually distort your valuation results. do you still keep them with this information in mind, or you will take them out when you do valuation? Thank you.
Okay, thank you very much. So to address that question,
More question? I'm going to ask a question I asked before to some other group. When it comes to ESG, the bank is doing a great job. But do you know if the bank actually passes this ESG guideline to other of their customers when they're giving a loan? Are they making sure that they've got the right gender mix or they have the right environmental guidelines and policies in place? And if they don't, should they have them?
To add one more question, you've done good analysis, but you've given us the recommendations. But what are you most uncertain about in your recommendation?
okay, thank you very much. If you can have a moment of discussion with my team, we would appreciate. Okay, thank you very much. So we will start off with the first question, which is the cost of equity. It has arisen. So the cost of equity, we feel like it's very expensive for us, even though it might seem like a very low number. Based on our analysis of doing the cost of equity using the capital asset pricing model, it gives a sensible number. And we want to also justify this because one of the last year competition was on the CRDB, one of the major bank here there in Tanzania. They also magnified the usage of like 11.5% to 12%, which makes sense for our valuation. We can validate it. In addition to that, using getting back to the CAPIM formula, we used entirely the data that we were able to find, such as the risk-free rate, the market premium, using the Tanzanian share index, which tracks the local companies that are listed. So using that market premium, it gives a adjustable number of 12.8, and that we would be firm about giving the 12.8%. The other question is about the comparables, using like 3 times of price to book ratio. So also, since the bank is found Sub-Saharan Africa and also in East Africa, there is the data limit. So we could go as far as what we can have in terms of the market data that the banks at NMB performance level perform. So we cannot get more data. So we think this is more sensible. But if we have like more data in terms of the banks and their listed information, for sure we can adjust, and we might have little room for adjustment. Thank you very much.
To answer your question that is related to ESG following guideline, that you have mentioned in your question that have they been loaning or lending to women? Yeah, they have, because they have been raising this Jasri bond to loan it back to women who are in business. That is a good indicator of that. Plus, they have been working towards complying with a climate environment, because they are aiming to achieve 30% of pollutionary loan in 2030. They have been working towards that. Plus, they have been investing in, they have been loaning like in MSME and agriculture, which indicates also their goal towards environment. Thank you.
To add that, they have work with United Nations Sustainable Development Goals and also a partnership for carbon and accounting and finances for climate screenings.
Well, thank you very much. So I just want to stay on the ESG part because ESG has been a bit not talked about. So some of the things that they've done in the sustainability ground is they had 100% LED light on their all of their operation. The second one is they've cut their water consumption by 10%. They planted 1.4 million trees across Tanzania, which makes it a very sensible number. In addition to that, they have decreased their paper usage by 14%. So this shows that NMB Bank is the leader of sustainability and ESG in terms of not only issuing financial kind of things, but also in terms of other aspects that determines the day-to-day life of the individuals. And the other question is from Mr. Saladi. The earlier one, you asked me like, what would I change if I were the board of directors? And I pretty much won't change anything because sometimes frequent change is not necessary, and we don't think it's necessary. But what they're doing is so amazing. So we don't have to change anything just to make this good work and make it progressive as it goes by. Thank you.
So we have additional questions. The last point you said was actually really good news for Innocent to go back and tell the NMB Bank. I'm going to piggyback on what Tedros has challenged you on, and maybe I'm going to try to ask that question a little differently. Have you figured out what has been the cost of funds for NMB Bank, which is what is the interest rate that they pay for depositors? One, because we're going to triangulate if the cost of equity that you're recommending is an appropriate number or an appropriate percentage. Second is there have been like 3 issuances. There's a Jami, there's Jaziri, and in the third one, I don't even know. What has been the cost of, those funds on those bond issuances? Again, like even if you don't include country risk, because I know for a fact that if your investors are in Tanzania and they are captive investors and not exposed to other, investment opportunities outside of the country, country risk may not mean a lot because they're out there and they don't have to figure out. I still believe that the cost of equity is something to be looked into, and the beta financial sector in Africa is closer to a market determinant, which means the beta is probably like correlating to the market because of the capital adequacy and leveraging all deposits and then bond issuances from bond investors and that intermediation. So have you really looked into those and answer at least for me the cost of funds that of for the depositors and for the bond issuances?
My question regarding your risk.
We have a very strict timekeeper here, but the teams are here to answer the questions on the side. Thank you, Team D. Good presentation. You may take your seats. So we've gotten to the end of presentation part. We'll give the judges maybe 5 or so minutes to deliberate on the final winner. And I will allow the judges to pick someone to announce who the final winner will be. And then we'll continue with the program after that. You did great. Yeah, you did great.
Can we get
The results are in. And I call upon Judge Omar to announce the winning team.
For the result? It's not what you expected, okay? I would like to take this opportunity to say a few words, especially to honor one person for whom I have the highest I have to go back a little bit and tell you a story. Someone gave me a book. The title of the book was Buy Low, Sell High, Collect Early, and Pay Late. And it was a very simple book. Very, very simple. But it introduced me into the world of finance. And 15 or 20 years later, I was introduced to a person, and that person had a CFA level 3. And I just wanted to bow down to him like this, you know, because this is the ultimate in my world, is to be a CFA level 3. But CFA level 3 was not his only qualification. He was a CPA, he had all kinds of certificates. And I just decided he's going to become my best friend. And then said, I know you want to study CFA, even though you're busy and you're a busy businessman, but the least I can do is give you all my CFA books, which costs a lot of money. And he gave me his books, and I studied it. And I took other finance courses. And then he became my advisor, my financial soulmate. And he invited me to join this. So I'd like you all to give a special hand of applause to Fasil. Yes. So as myself and the judges were judging, we were talking to each other. And finally, we said there's a few things we'd like to share with the participants. A few points. Number one, we felt that the information in the deck was much, much more than the information you could have possibly communicated. And therefore, a suggestion that comes from the judges is try to keep the decks simple and to the point. And a lot of information does not help. But if you will learn. It's called the McKinsey approach. It is, and I'm sure all of these top consultants in this room from BDO would agree, is they take a lot of information and they bring it down to a few very punchy points. Another big point that came from the judges is challenge the cost of equity. This came also from the judges. It was very important. And so in the next time you consider this, please delve into this a little bit further. And another judge has said, please try to listen better to the questions. So I have to relay that point as well. But really today, all of the participants are winners. You're all winners because you're all here. You did the work, you presented, you competed in good faith, And you have all won in our eyes. In fact, the side conversation we were having is, if this is the new breed of students in finance, both the capital markets and the financial sector as a whole is about to change because of you. So thank you very much for coming. Now I will first announce the winner, the final team. The final team came from Addis Ababa University. It's Team D. Thank you very much.
Thank you very much, Judge Omar. I've learned something new today. Buy low, sell high, collect early, pay late. Good. Does that just apply in business or just life? Okay. Good. Congratulations to all the teams, the two finalists, and special congratulations to Team D. So what we will do now is we will award all the teams with obviously a special award for the winning team. But before that, I would like to call a special guest to come give us some remarks. She's been a great partner to the CFA Society and the program, and she has some breaking news for us as well, for the winning team. So, Dagmawit, welcome.
Thank you. Very impressed today and very, very glad to be here. So thank you. My name is Dagmawit. I'm from UNDP Innovative Finance Lab. We've been really encouraging the development of the capital market. And for that, of course, capital market is not asset dependent. It's actually human dependent, right? So we're trying to develop the human capital market. And the CFA, we believe, is one of the gold standards. And we wanted to install that within the market. So encourage potential other investors in the ecosystem. We wanted to be the first to kind of nudge the support. And so we've been supporting with scholarships. Last year, we have supported around 50. We have provided 50 scholarships, and 50% of that cost was covered by CFA, and 50% was covered from UNDP. And so for this year, we are also awarded another number of scholarships. And from that, we wanted to give the winning team scholarships. Congrats.
So please don't sit down if you don't mind. It's only natural and fair that since you're awarding scholarships that you award the gifts you have today as well. So I'd like you to remain here, and I'd like to be joined by Innocent from the NMB Bank. In fact, before you join, as a subject company, I'd like to give you an opportunity to give remarks. I mean, you've seen the analysis the teams have done. It must be music to your ears. Everyone's saying to buy. And I think the share price now reflects that. So it's also a good indictment on the team that, you know, when they were doing the analysis, the share prices they came up with is not too far from the current share price today. Right? So the level of analysis was really good. But I'd like to invite you to come give us a few words to, you know, the general public and the students as well.
A very good afternoon, one more time. On behalf of NMB, we are very thankful and appreciative of the tremendous work all the students have put in to analyze NMB in such a way that it provides to the overall audience what kind of an institution we are. And it affirms and reaffirms the strategic direction that we've been taking as a bank and the commendable results that we have seen. You have spoken about the share pricing and the valuation the students have come up with. And this is just a testament on how solid our medium-term 2021-25 has been. Just to take you back, in 2020, when we came up with this medium-term plan, our price on the stock was 2,340. And at that time, majority of the analysts, not only they had a sell side, some who at least they were optimistic, they had a hold side. So we are grappling with the challenge of the buy side because one, we had a twin problem whereby there was no volatility in terms of the stock price and there was no turnover in terms of volumes. But guess what? Some years down the line, and today we stand here very proud to see that that share price has moved from 2,340 and currently we are trading at around regions of 14,500. So when I saw the projection of 15,000, to me, I'm very happy as the Director of Investor Relations because it continued to prove that I'm doing the right things within the bank. To the students, I would like to congratulate you and to urge you to continue pursuing excellence in the ways that you have done. The young gentleman I've come up with here, Samuel, is a byproduct of similar competition. So we have a number of students we have taken from the CFA challenge, whereby we earmark talents for the future to come. So this is a very right platform for those who have won, even for those who have participated. Trust me, corporations, they look here for talents, and this is the best breeding ground to develop talent and to see talent. Continue with pursuing excellence, and may you find the excellence that you pursue. Thank you so much.
Before you sit, Innocent, now for real, I'd like you to remain here. Doug Bowitt, if you can join me as well. Now we're going to move into the awarding of the certificates and the other prizes. I'd like to call a representative from the exchange as well, our hosts. You must. I'd like to also call a representative from the ECMA. Basically, I'm calling all our partners. So if you're, I'm going to call you. And there are 5 teams, so naturally we need. I'd like to call a representative from the UNECA. Okay. So this is just to award the certificates and for photo opportunity as well. And we will go in reverse order, but not in any particular order. So we'll start awarding from the non-finalist teams. And when I call you up, it doesn't mean you are 5th ranked. This is just random. If we can start with team A, please. Just to make sure I don't butcher the names, I will hand over the name reading ceremony to Faisal.
Well, this is my opportunity to grab the mic back from John. Did an excellent job while I was judging. What time now? Take it back. Fikra Salam, Yisahau Tasama. No problem. Sorry about that. It's minor correction. So we start with team B. Am I correct? B. Great. Correction to the correction. Samurai Matur Brahani. Johannes Alamayo Atla. Delawit Marcos Demere. Bruhanu Kawo Dabele. Bruhan Panta Asfao. Calling team B. If you don't know who team B is, it's got Barakat, Fenet. Okay, Tizita, please.
ተሳስተሃል በዛ
ፍቅረ ሰላም የሻው ተሰማ ሄለን ሀብታሙ ፈለቀ ደረጀ ጎቢ ኪዳኔ እስከዳር በላቸው ሰብስቤ Oh, you all take a photo, please. I'm calling the team from to come to the stage. Alam ኦሊያድ በስራት መኮንን ካሊድ ሙራድ A very big applause. So is there a group that contains Barakat, Grace? Yes. Lovely, thank you. So this is our runner-up of the CFA Research Challenge. Great work, and I'll call the names. Barakat Makwan Desta. Tanet Chala Ragasa. ትዝታ ማዕረጉ ደላው ግሬስ አምቢሳ ቀና መክሊት ታደሰ ደሳለኝ
Let's recognize them. Let's connect them.
Very good. Before we call over the winning team to the podium, I would like to call the leaders for the outstanding service. I'd like to call Dr. Alamu. Is that up? Mr. Tahir Dasta. Mr. Ayala Kabada. Many times more. That was a good one, I think. Dr. Howlet Ahmed. I have 2 certificates for Ayala Kabada. Shall we do it again? We also like to recognize our industry mentors for their outstanding contribution to this research challenge. Dr. Tasfa Nega Tasama. Warm applause, please, for Dr. Tasfa. Mr. Bayu Samuel. So it doesn't look deliberate. I have 2 certificates for Dr. Tasfa, so you can collect it there. I'd like to invite the faculty advisor for the winning team to the podium, please. Woohoo! There you go. Barakat Brahanu Habte. Murata Brahan Alam. Kandia Makwea Masa. Elham Shamsu Yasin. And then finally, Caleb Makonnen Bogale not only for winning, for the winning team, but also for his tireless volunteering and support of the challenge. He is also the representative of the Afro Stop Pitch competition, who is a partner of our challenge here. Thank you for all your work and congratulations.
But we're not done, unfortunately. The winning team, in addition to a certificate, gets a shiny thing for their mantelpiece. I will ask each sponsor, partner representative to hand over with handing over some money. Okay, I will not call. Good. Faculty advisor gets 2. So for next year, an encouragement to volunteer. So if you can just come one by one and pick the team leader. Then we can go next. We also have one for the industry mentor, who I believe is not here. So if someone can collect on their behalf. Okay. Good. We are done in terms of the plaques and the certificates. There's still a check to be delivered. And I would ask that Dagmawit, in line with your generous offer, to also hand over this to the winning team. I'd like to also invite our judges for this photo opportunity. Thank you very much. You're welcome to take your seats. We have We've come to the end of the inaugural CFA Institute Research Challenge in Ethiopia. And this is what making history feels like and looks like. So congratulations to everyone in this room. Congratulations to the universities that are pioneers in this in Ethiopia. Congratulations to the students as well. And at the risk of gaining some enemies because I'm standing in between you and your afternoon lunch, I want to close quickly, but I cannot close without, again, thanking our partners, thanking our judges, thanking our universities, thanking our mentors, thanking our faculty advisors, thanking our students, and thanking our invited guests, as well as volunteers. This event was not run without volunteers. So a special mention to the volunteers, both within the society and outside as well. So with that, I'd like to call a close to the CFA Research Challenge, Ethiopia. Thank you very much and have a good rest of your afternoon. The cameramen are here. This one is at the back. Yeah. So fully paid for, so please take advantage. The cameraman. You're welcome to stay behind. Right.